Good evening, folks. It's Jeremy from Trading Safely. Welcome to our weekend webinar. We're going to do a quick update tonight. It'll probably take about half an hour of your time, run through the major markets. Unfortunately, tonight we've had a few technical difficulties and Sean won't be able to join us, but he is going to record a separate video on the sector analysis and what's happening in US stock markets for you that we'll post separately on our Slack site and probably on the YouTube site as well, so stay tuned for that. For anyone new tonight, welcome for the first time. It's a good opportunity to get an update on what's going on in global markets, and for those of you that are new, we do have our website here. If you go to www.tradingsafely.com.au, you can see our subscriptions plan and the services that we offer. We cater for everyone from beginner to even expert or professional traders, and we have a package for everyone. Now, in the Platinum Plus package, probably worth pointing out that there is access to Chart IQ Trading Safely software for, with full access. So you are able to get a trial of that if you would like. Just let us know on the Slack site. So here on the Slack site, we've got the various markets that we cover, and we constantly update it with levels and what we think is happening in each of the markets. So without further ado, I'm just going to run through each of the markets, starting off with oil. So oil, I'm just going to follow the same analytical path through this webinar tonight, where we first of all will look at the closing analysis, then look at closing support and resistance, have a look at our range deviation pivots, and certainly the forecast for the next time periods, given that we're in the new month and new quarter and the new semi-annual period. For anyone new, all the colours that you see are colour-coded for time. So typically where you see yellow, it's weekly, pink is monthly, quarterly is brown, semi-annual is blue, and annual is orange. So when we look at, let's just jump straight into oil. It's obviously been very volatile, courtesy of the big moves from the high down in 2015. That volatility is still playing out. We're getting these big swings, without any changes in even the monthly trend. If I look to this study at the bottom, this tracks trends across time. Even since the start of the year, the monthly trend has not been affected despite the big moves down. We certainly had a test of a quarterly bearish pivot at the low here. In fact, if I add that on, just now, you're going to see that it was almost the low to the tick there, that quarterly bearish level down there. But first of all, let's just start with the close. So we obviously closed below last quarter's close and below last month's close. However, we did, as we discussed just now, bounce off this critical bearish quarterly pivot there, and we failed to close under that at the end of June. So that's avoiding a bearish close is almost a bullish signal. So looking ahead at oil, it does look strong. Now looking to buy dips. Last week we had a weekly buy signal. So any dips overnight tonight, I'll be looking to come from the long side now. So the critical supports this week, let's have a look at them. Start with, we've got the weekly bullish is at 44.90. That would be one place to be looking for short-term bounces. Similarly, if we got a spike all the way back down here to retest this low, there's the monthly bearish down there at 42.29 this month. There's no slingshot set up, so this market is fairly orderly in the way it's distributed across time at the moment. So what do I mean by that? Well, in this instance here, you can see those little white dots. So that happens when this weekly bearish pivot moves outside of the monthly bearish there in pink. And that represents a state of disequilibrium where the market can react up from, and it happens from up and from down. You can see up here we had little white dots to the top side, creating this energy down, and once again here creating the energy up. And that is a fractal process. So in the short term, we can see weekly support here at 44.90. If we take out the range deviation pivots and have a look at it on a closing support basis, we've got daily closing support here at 44.68, so that ties in with that weekly bearish pivot there. You know, you've got a strong support zone right there. Be interested to see overnight if oil back tests this level. That's going to be not a bad place to look for support. If we do get more volatility, there's obviously this strong support down here at 43.17. Anywhere near that, I'll be looking for buy signals too. So right now there is no buy signal for today. We still are riding a weekly buy signal from last week, so that means that we are looking for looking to enter oil from the long side for now. You know, certainly by the end of the month, the bullish case for oil would see a monthly close over 48.89. In terms of the upside for oil, we've now got this critical level. We've got this quarterly support dropping, and even now we've got a semi-annual support dropping. So that means that this level right here, 54, which happens to coincide with last year's close at 53.89, this is a major level. And if oil was to take that out, then it's going to open up, you know, much higher, this sort of 67 area. But let's not get too far ahead of us. I am looking for support and buy signals down here at this stage around 44.90, and to the upside, we've obviously got some closing resistance opening up here at 53, and then the recent high at 52-ish. So moving on from oil, I'll just quickly check out some of the precious metals. So let's jump on over to gold. Gold's been in a downtrend. It got pretty overextended to the upside. You know, it reached the limit of participation across time at that recent high up at 12.97. Now I'm just going to take these studies out. Go through the same process again. So gold is under pressure at the moment. When we look at, might just bear with me, folks. I'm just going to reduce this. Okay, I just want to make this monthly close a bit bigger so everyone can see it. Okay, there we go here. So we closed lower this month. Okay, that's last month up here, 12.67. We've closed down here, and we've closed under last quarter close, which is right here. So we've closed lower, and we've now made a new monthly low just today. So gold is under pressure. Last week we said through several of the videos that some major time frames were going to move above price. So this study here tracks the mean reversion process. And remember the colors: yellow's weekly, green's daily, pink's monthly, blue semi-annual, orange is annual. And what we were saying last week was that this monthly level was going to move over price, and this quarterly level was going to move over price. So we've got three time frames: week, month, and quarter. They're all above where we are right now. Okay, so the only remaining supports on a mean reversion process or basis are down here at 12.20. So we've got what is effectively a weight on gold from three higher time frames. So on a closing basis, really the next major support for gold is down here. We're looking at last year's close, which is 11.52. If we come to the range relativity study now and have a look at gold this way, so there's our monthly bearish at 12.06, monthly bullish at 12.80, weekly bearish at 12.29.5, weekly bullish 12.53. So right now that market is overextended to the upside on a quarterly level. So just as I pointed out these little white dots in the last, when we just discussed oil, these little white dots reflect the week to month relationship. Well, these brown dots reflect the quarter to year relationship. So this quarterly bullish pivot is above the yearly pivot, creating the potential for gold to go down. And you just need to bear that in mind when you're thinking about possibilities. So obviously when you get little white dots leading to this sort of move, you can imagine a move that would come with a quarterly reaction. So you need to be on guard for gold potentially going lower. Now, what are the levels in the short term that we need to observe? This seems to be quite an area right around here. There's 1229.5, which is the weekly bearish, and 1227.8. If we were to close under here, end of week, it's going to open up a retest of this intermediate low at 1214. And if we took out that 1214 low on a weekly basis, then you really are opening up much lower. So they're the levels you should be watching right now, around 1228 and around 1214. Now for the bullish side, we need to get back above this falling monthly resistance level. That's acting as a weight on gold now. Really, for me, the bullish is back above here. When you basically need to get back above 1280 on a weekly closing basis to really get gold into a move higher. But with all the weight on it here, it just seems unlikely for now. So we look for a continuation sell signal on gold. That's one of these little red dots. That's a daily sell. The green dots are the daily buys. So I'd be looking for some sort of continuation sell signal on gold. Potentially a break of this support here at 1229, and then a move lower, and then a back test of this level. I'd like to sell a back test of this closing level. On the way down, there are several other important levels to observe, and they are around 11. Here we go, 1199 to 1189. That's where gold's also going to do a bit of work before this gap opens up down here. Moving on to silver. Silver's somewhat similar. Let's just have a look first. Okay, when I look below, there's a very powerful confluence of timeframes right here. You've got yearly, semi-annual, and quarterly midpoints all bunched up together, and we made reference to that a few times. That 1720 to 1740 zone is extremely powerful, and you can see it basically splits the middle of this distribution, that price. So we are underneath that now. There's a lot of weight on top of silver. Need to watch here. If you're long, it might break down. Immediately coming to mind is last year's close. That is a significant level. You can see we've held this close on a few occasions. So a weekly close back under this low and back under this annual close is going to open up lower. In terms of immediate support and resistance, if we were to test back up to this 1670 level here, that would be a good place to enter from the short side, because above there on a daily close would have you out of that position. Similarly on the downside, initial support would be coming in around 1628, as these weekly bullish and bearish levels often act as support and resistance. But certainly a weekly close under this weekly bearish level would spell lower for silver, and that's at 1628. If we add in now support and resistance, okay, so we see this weekly level is corresponding with the weekly bearish range deviation pivot. So 1628 is a critical level. The monthly level, this monthly pink level here that's come up, that is combining with last year's close. So you got some major supports from 1628 through 1587. But basically, if we were to take this out on a weekly closing basis, then you're talking about some pretty big gaps, down to 1465 and then 1382, which is basically that's the lower end of the correction to the downside, because that's the yearly, and here is your yearly bearish target. So that's a very strong support zone where you'd like to see silver hold and basically correct from there. That's even assuming that we do break down. So the weight looks down on silver at the minute, much the same as gold. To the upside in the short term, you definitely, to be bullish, we'd like to get above this daily closing resistance, circa 1670, and take out the weekly bullish pivot there, that little yellow one there. That would generate some upward momentum, but so it certainly looks bearish to me at the minute. Next, we might just move on to the grains. Wheat's broken out furiously. We've had Sean put on long positions in corn and wheat on track our trades. I think there's some weather that's come through, Sean was saying, so the grains have really sort of motored higher. But first of all, let's just come back and analyse this step by step. So on a closing basis, when we look at all the closes, you can just see how congested wheat got for all this period right through here. So right now I'm looking at these little pink crosses and brown crosses, and this white dash line, which is last year's close, and the little blue crosses are the semi-annual cross. So when you get all the closes across time like that, close together, the market becomes range bound. Indeed, when we look at the mean reversion process underneath, you can see it looks a bit like spaghetti. Everything's trapped between the higher time frames. You see the annual time frame on top, and then you've got the quarterly and semi-annual on the bottom, and the market's effectively rotating around the midpoints and the closes, like two fences having a sword fight, waiting to see who's going to win. And the answer is pretty apparent now. When we look at range deviation pivots, we've had a bullish close. So if I'll just add those back in. Okay, so right here, that was our quarterly and semi-annual bullish. We've taken that out on a quarterly basis. So we've generated quarterly and semi-annual buy signals for wheat. Now, typically, just to get those sort of buy signals, you become overbought in the short term. But interestingly enough, that relationship is starting to set up. And now we see that these quarterly bullish pivot has moved above the yearly bullish pivot. So, when markets break out, even though you get this relationship, which is like a negative slingshot quarter to year, the market can still break through that. It just tells you to pay attention for any failure. Here's a good example where we had these white dots and the market still pushed higher. Well, the same thing can happen here. It just tells you that, hang on a second, I need to pay attention here. Make sure wheat does continue to break out through this upper quarterly pivot at 56.42. So decisively broken out. Now, if we have a look at the weekly bullish and bearish, well, the weekly bullish is there at 53.06, weekly bearish 51.10. So that'd be good places in the short term to either get back into this trend or potentially to take some short-term profit. But if we have a look at closing support and resistance, first of all, see, that's very interesting there. That is a quarterly, so that's a semi-annual closing level that has now dropped as support. That hasn't changed for, well, probably a very, very long time. So that's probably telling us something, folks, about the nature of this breakout, the fact that we've had a semi-annual closing support drop under price. In the short term, if you're looking to manage this trade and you're long, well, typically what we'd be looking for is either an approach to a key resistance. So we are coming up to an annual level here at 54.06. Wait, we'll do a little bit of work around this level. But in the short term, we'd like to see this little green line pop up over price and become resistance. So far, that hasn't happened, so you don't stand in front of it. Similarly, we'd like to see this little, while this yellow weekly level remains under price, there's no reason to be trying to sell it here. It's broken out. Let it run its course. It can be an expensive habit trying to stand in front of a train and getting run over by the train. So looking pretty bullish there. Wheat, and obviously just need to be a little bit careful of that range deviation pivot relationship I was just talking about between this quarterly level and this annual level. The fact that the quarterly is higher than the yearly is just a warning sign of an overbought market. But as I just said, markets can go through this and continue higher. It's just a place of it's just to make you stop and think. I think corn retested support. It took the lead a little bit earlier than wheat in the breakout, and then ended up testing support again. I think on the Friday session, it broke above control. Control is what's called, basically it's the middle of a distribution. So when I look back at what price has done over the last sort of whatever it is, 5 or 6 months, the middle of that distribution of prices is called control. And I think by the look of it, the corn has moved above that. So the pressure's on now to the upside for corn, along with the other grains. If we have a look at it on a closing basis, here's last quarter's close. So we've opened up here. So we closed higher than last quarter. We had a slightly lower close than the previous month, but we're definitely above quarterly closing support, yearly and semi-annual support. So that gives it a good, solid, fundamental floor for corn to go higher. When I look down here at the mean reversion process, you can just see how bunched up all those time frames are. It's quite incredible. You don't see that very often, where you have month, quarter, semi, and year all within, it looks like 50 or 60 ticks. It's very, very unusual. So that means that from here on in, this is a extremely powerful base if we can break out above this level on a closing basis. So bullish then for corn. In terms of the range deviation pivot targets to the upside, if I add these back in, the monthly bullish now lies up here, 38.76. We'd like to see a monthly close over that. This week you've now got support down here at 36.70. Any pullback to that, or even back to the monthly close, we'll be looking for short-term signals off that. We're on a daily buy signal from just recently, so looking for dips on corn. Starting to look very strong again. What else? I might just have a quick look at sugar. Sugar is looking good. It's hit the bottom of a very, very long-term quarterly channel. We pointed that out on Slack not so long ago. If I come into sugar here, there it is here. Okay, so I'll just double click on that. We bounced into this quarterly channel, and this channel is now held. So when I come back to the chart here, we're now looking for a retest of support. You can see at the moment we've got weekly buy signal, daily buy signal, and we're now just coming back to retest support. So I'm interested in getting on board sugar pretty soon. So we think this is like exhausted now to the downside. There's a few clues. One's here. When you see a big rally to the downside, you can see how time reorganizes itself. So now from the top, we've got the yearly, semi-annual, quarterly, monthly. Everything's in order. Now, prior to that, they weren't in order. So that tells me that this is a good chance that this is close to exhausted on the downside. We should be aware that sugar might bounce from here. Now, in combination with hitting that long-term channel I just showed you on the downside, and with oil reversing around as well, there's a few signs that sugar's going to move higher, and a lot higher. Now, one of the other critical things that's very, very rare that we've pointed out is when I add in the range deviation pivots, This is extremely rare. So when we look here, here's our bearish annual pivot, this orange one right there. Okay, now sugar has got so oversold that both of the semi-annual pivots and both of the quarterly pivots have moved outside of the lower bearish yearly pivot. Now that means that sugar is in what's effectively a double slingshot mode up, which is very, very rare and is usually associated with some enormous moves to the upside. So pay close attention to sugar from here on in. We'll be looking for short-term entry points. As we speak, sugar's actually come right back into support. So you could zoom into a 60-minute chart right now and start looking for buy signals. And you know very, very quickly whether you'd be wrong with the move under this weekly bearish, because that acts as support. In terms of the support and resistance, this will probably give us a better idea. Yeah, so we've got double levels here. You've got that monthly at 13.16, and you've got the weekly bearish at 13.26. So anywhere in this zone here is now strong support. You can see the weekly levels dropped under price. If we get a bounce out of here, sugar, and then we take out this level here at 13.85 on a closing basis, sugar it looks like it can rip to me. So I'm pretty excited about that sugar opportunity. So we'll let you know on Slack when's a good time to get involved with that. Next, we might go on to currencies. It's been a pretty wild week for the euro and a lot of the dollar index pairs. Now the euro's broken out. Let's just call up the euro. This is the euro futures I'm calling up. Very, very bullish move last week. So now we've closed. Yeah, so we've closed basically. We've had what appears to be quarterly and semi-annual buy signals. So expect probably a short-term reaction down in the euro, but I think bigger picture it's going back up, courtesy of those closes. So those closes I'm referring to are here. Here's our quarterly bullish and semi-annual bullish from last quarter. You can see the bearish all the way down here. So that's a quarterly and semi-annual buy signal. And to boot, here we've had a monthly buy signal as well because we closed over this pink upper level. But in the short term, expect a retest. This is a strong support zone here between 114 and 113.226. We'd be looking for any additional buy signals like this to re-enter from the long side. Now, just need to be careful because that is trading against the trend, but this is telling me that the euro can potentially go higher here. So just be mindful of that if you are thinking about getting short. One of the other things that we mentioned and have mentioned quite a few times now is that there was no qualified resistance created for the euro, and that we needed to be extremely careful about selling it. So I'm just going to add in qualified support and resistance to show you what I mean. So this is what I mean here. See these weekly levels? See how they never moved up over price to create resistance? Okay, so that told me at this point here that, well, okay, I'm not that in love with this weekly sell signal that we had because these lines hadn't moved over price. Sure, we're coming into this powerful resistance area, 116. That still remains there. The euro can still go up here. This could be a good place for the euro to fail because at that point, we've got this quarterly bullish pivot and we've got this monthly bullish and we've got these two resistance levels. So that's a major area between 116 and 117 for the euro to fail. So when I'm kind of thinking that we're going to get this pullback here and then we test this 117 level. So in the short term, we've got initial support here this week at 114. Can turn up from here. If it decides it wants to retest the breakout point, it can come back to 11326. So just look for short-term entries either around here or at 11326. In terms of the closing peak supports, let's just put those up. Okay, so there's our weekly level right there, 112925, and that's in combination with the monthly bullish. So you've got a very, very strong zone right there. If we started to close under that on a weekly basis, you'd think twice about the euro. So really strong support zone for the euro between 114 and 113226. For me, any buy signals back in this zone, that would be good. Your stop would be back under this weekly closing support. But I think that's opening up these levels that we just referred to before between 116 and 117. If we took out 117, then we've got an interesting scenario on our hands, because you're then talking about 129. But let's not jump the gun first. So the key levels to watch now are a pullback of support into 113226 area, and then higher for this 116, 117 zone. Let's just have a look at pound. Pound's a little bit similar as well. Had a big rally up and took out the monthly closing resistance level at that circa 1.295 on the spot. Let's just go back step by step here. Take that off. So if I add in the closes first, let's see how the pound closed. Okay, so we had a bullish monthly close up here. It was above last month's close, and we obviously closed above last quarter's close. So we're sitting on a bullish base for the pound on a closing basis. I do believe it's a little bit similar to the euro. I think you've got longer term buy signals in play, and we're getting a shorter term correction before another leg higher, is what I suspect. So I'll be questioning this sell signal, and I'm looking for the pound to turn back at support. So let's just have a look where those supports are. Okay, so here's another sort of shorter termish bullish signal. You can see monthly support formed, quarterly support formed, and now we've got semi-annual support forming. These are all bullish indications for the pound, but notwithstanding the fact that the pound is still a long way under yearly resistance. So, this could be the final leg for the pound before down again, and this orange yearly downtrend remains well in play. So for me, I would like to see your supports are back down here as low as whatever that level is there. That looks like just around 128. You've got support 1274 and 128, 1277, 1274. This is a strong support zone. In terms of range deviation pivots, if we add those in, this is also the monthly bearish, so very, very strong level. If the pound happened to pull back down here and give buy signals, I'd be pretty interested. In the short term, however, you would be looking for pound to hold. If you are long, you'd be looking for the pound to hold 1.2964 in today's session if it's gonna move higher. So that would be an entry point if you get short-term signals off here. If that fails and gives way, then you've obviously got the previous month's close here at sort of 129, and then this major sort of zone down here at 12775. So note, however, that this green line has not moved over price yet. It hasn't popped up telling you that this could just be a pullback. It's about to go higher. Unfortunately, we missed this buy signal here. We were riding a short that we had on from up here, and we got stopped just around here off this weekly support. Never mind, the market will continue to open up opportunities. So for the short term, you can see on a daily basis down the bottom, when we look at the mean reversion process, that we're above the week, the month, and the quarter. You've got the quarterly stepping up now, so there's some rising support on a longer term basis for the pound. However, don't forget that here's Big Daddy up here. That is 1.35. That is the previous year's midpoint, and it also happens to correspond with the previous year's closing low. And so any move up in the pound should be capped to about 1.35, and if we happen to close over that on a monthly basis, then you would start talking about 1.5 and higher. So they're the supports. That's what you should be looking for. It's saying higher, although in the short term we have become a little bit overstretched to the upside. So expect lower before potentially higher again, and we'll be looking for buy signals on the pound as it comes down, with a view to that 135 area. Just going to Aussie dollar. That's been pushing up in sympathy along with most of the other US dollar pairs. That's been, I think this is like the third time it's had a poke up at the 77 level. You know, the major level for the Aussie dollar is, I'm just going to show you where it is. I'll just take some of this stuff off. So the major level for the Aussie is, hang on, just bear with me, folks. That's not study. I think it's this one here. Yeah, this is the one here, 0.7837. If we start closing above 0.7837 at the end of the month, then the Aussie can go a lot higher, all the way up to circa 0.9. I don't believe that's happening at this stage, but it's just good to be aware of that level. So remember that level, 0.7837. A monthly close over that would open up a lot higher. As it is, as I mentioned, the Aussie dollar's been basically poking at a piece of paper towel, which is this level zone up here. It's had like three goes at it, and would be interesting now if the Aussie dollar did fail. When I look at it, however, you know, all I can see is support forming for it. I've got quarterly rising support there. I've got monthly rising support here. We've got a very, very, very powerful zone of between 0.746 and 0.7464 or 7.34. You really need to see the Aussie take out this 0.7434 on a monthly basis now. And you know, it's interesting because this semi-annual level has now dropped. I mean, that hasn't changed for a long, long time, and that's now acting as support. It's moved under price, so can't ignore these things. Deep support forming looks for the Aussie dollar, despite everyone crying that it's going much, much lower. So yeah, it's a bit like the pound and the euro. It looks like it's short-term overbought, but certainly you'd like to see it take out this daily level on a closing basis at 0.7624. That was acting as a stop for a previous short position that we had on here, but now, you know, if this green level moves back above price here and we get another top forming, then we can reassess with the Aussie. But it's starting to look like it's firming up. But so we do have a daily sell signal buying today, but it's not actionable just yet. Let's just see what happens. Obviously, the trend is still up. You can see that this weekly level here hasn't moved above price. So what do I mean by that? I mean like this, where the yellow line moves to the top and starts acting as resistance. At the moment, it's still support, so that tells me to be very mindful of any of these sell signals still. So what else have we got? US dollar yen. I think last week we mentioned that needed to close the month above 111.79, which was the intermediate high. It did that, and has been moving higher ever since. So let's just run through this analysis again. So closing basis, there's the little pink crosses. We closed up there, so that was higher than last month's close and higher than last quarter's close. So that means that you've got a positive closing support base for dollar yen. And what we noted during the week last week was that, well, we would need to see it close above this intermediate high on a monthly basis for it to move higher, and that's what it's been doing. So nothing unexpected there. In terms of where it can go to, initially we've got this level here, 113.353, and then through there it turns into a bit of fun. We've got a retest of 117, and I like that even more now because we've had this monthly support rise, folks. So any retest of this zone down here is going to be a good place to be long if you're not long already, and that looks bullish to me. So short-term target is nearly met at 113.353, and then from there, it may be that we get a retest of some support from this peak here, and then a move up to 117. So looks bullish, dollar yen. And finally, we might just jump over to bonds and then equities. So let's just have a quick look at 30 years. I took a bit of a beating last week. This is Treasury bonds. So yields start to spike again. I'll just take out support and resistance. Let's have a look at this from a closing basis. Okay, so we've closed lower on the month. However, we closed, there's the previous quarter's close. So we had a higher quarterly close. So let's just add in support and resistance here and see what that's telling us. Sorry, folks, the computer's going to mind of its own at the moment. Just bear with me. Oh. Sorry, guys, the computer's just thinking. Okay, let's try that again. Okay. All right, this looks interesting. It looks interesting because we've had a few of these lines change. So we've had a falling monthly resistance. So typically that's bearish. So this level here, this closing level at 155 is now a powerful resistance. If the market was to pop up back through here, that would be a good place to get short in here with a stop right above that yellow level there at 157. So it looks like the weight is back on, but equally, we've got this rising semi-annual support. So there's no doubt that the broader trend for bonds is down. Last year's midpoint, I think, was up here at 162. We've had a crack at that and failed, and now we've got the falling monthly support. So I guess what that tells me is you must listen to the longer term trend. It's still down. You've got falling short-term closing resistance, and this is an exceptionally strong level here at this sort of 150 to 147 zone. So really, the ultra bearish scenario is a monthly close under 147. That can open up 128. In the short term, you'd probably be looking for any bounces. So if we call up the pivots, let's have a look at what's going on. Oops. Here it is here. So in terms of these pivots, any move up towards 154, that area would be looking for short-term sell signals, and support at the moment for this week is 152. if it does happen to break down, you've got quarterly support and the monthly bearish acting as support at 150. So interesting here as well, you've got this quarterly negative slingshot set up where this quarterly bullish pivot moves outside the annual. And you can see the weekly slingshot and the monthly slingshot coming into play already to the downside. So you've got almost a triple slingshot that's been in play here. So watch out for bonds. So if I add in this closing support and resistances, anything pop back up to with this 155 area, I'd like to be involved from the short side around here with a stop just over. Certainly this downtrend that's in play now, you can notice how these green levels haven't moved under price, so it's still in free fall effectively. If I saw that green level drop down, then I could expect a retest of resistance, but so far that hasn't happened. So yeah, the weights on bonds again for the moment, which is interesting. Let's move on to equities now. Let's go to the S&P, the futures. Somehow avoided a lower monthly close, so I guess that keeps the pressure on to the upside. It's been quite amazing and just does not want to go down, so we need to pay attention to that. I've been pointing out week after week that we haven't been able to close above any of these monthly bullish pivots in pink, and we failed again. The last time we did it was back here, and that was months ago, 1, 2, 3, 4 months ago. So typically when you see that, market's correct, but so far, I was hoping we would see, from the bearish perspective, I was hoping we would close on the last month's close, which is 2414.25, and you saw just day for the last 4 days it went down there and tested it, but it just couldn't do it. And now we've closed higher, so that's not to say it can't go down, but it's not going up either. So I just want to check to see if we've had any resistance formed. So this is another thing. We've got this major support here at 2401. This level hasn't moved above price to form another important high. We've got a couple of buy signals forming. Really, it's a difficult place to be trading here. It's very, very difficult to be getting long here. You're trapped. We've been trapped in this range for what seems to be an eternity, and we haven't been able to take out these monthly bullish pivots. So there's a strong case for downside, but it didn't close lower than last month. So you can only listen to what the market's telling you. When I look at the mean reversion process down here, this monthly level has finally moved above the weekly level, so that's contentious. That could mean that this 2426 area is now currently acting as resistance. So in the short term, we've got this weekly bullish here at 2434. We need to get above that pretty quick smart this week to avoid a move down, I'd say. And certainly you've got this weekly bearish now at 2409, so you can expect a little bit of work done around there while the S&P works out whether it's going up or down. In terms of the distributional values, you've got 2439.75 and 2422.75. That's sort of the distribution. The upper and lower edges of the distribution over the immediate period, so they're typically not bad places to trade around if you're a short-term trader. So that's 2439.75 and 2422.75. So look, there's no clear signals here for me. I'm seeing weakness in some respects, and then I'm seeing strength in other, and so that tells me steer clear of that market and find an easier market to trade. For me, I've been long the S&P, and I still don't have a reason to be selling it. I was looking for a lower monthly close. It hasn't given me one, so therefore, in the short term, I guess I would be looking for. I'd be looking to have this low taken out as an indicator that we're actually correcting. So there's much ado about nothing with equities at the minute, and that's it leaves me feeling uneasy. So let's just see whether we can break out of this range, and hopefully that'll give us a bit more information. So they're pretty critical levels there. 2447 to the upside, I think it was. No, 2451, and then to the downside 2402. We need to move out of that on a weekly closing basis to determine the next direction. So sorry, can't offer any more than that at the minute, folks. It's very, very tricky, as you can see. Bigger picture, you know, we're still riding on some long-term buy signals. However, if I do look at this quarterly bullish pivot, you know, look at the last day of the quarter, we closed under it. So we've avoided a bullish signal there, which is the first sort of lead up to a bearish signal. But having said that, you know, it's been months and months since we've taken out this bullish and it hasn't gone down yet. So there are mixed signals coming out of equities, but I'm extremely wary, and I'm prepared to just stand aside at the moment and let the market tell me what it's going to do, rather than getting involved in it and talking it down like most people are. That's generally the fuel for markets to go higher. Dow Jones is going to be telling a very similar story, I'd say. Our cash. Yeah, so once again, there's last month's closed. We closed higher. That's typically bullish. Very interesting here, noting that we closed under the quarterly bullish, so we've avoided a bullish signal there. That's another warning sign. In terms of support and resistance, just bear with me. Yeah, so I've just added the support and the resistance, and there's just absolutely nothing has moved over price. So all the levels, all the major levels are all underneath. So they're down here, all the way down here. So what I'm looking for is a resistance to come up above price, like this. But it's just not happening, which makes me question this market going down. So what else can we say here? I mean, there's a couple of sort of sell signals in play, but you know, until we get resistance moving to the top, I'm loath to sell anything. If we look at the closing levels, you know, we've had some indication here. Okay, there's some sort of weakness coming in with this closing supports, closing resistance has moved to the top, but that's not qualified. It's not as strong. So look, the levels are quite clear there. You know, back over 21454.6 in the short term opens up higher. That's a double zone there. You've got weekly and monthly, 21394 to 21454. That's a powerful resistance. If the Dow is going down, you'd expect it to possibly do a bit of work in there tonight. However, it'll need to take out 21287 on a daily closing basis to then open up to 20,804, which is the weekly closing support. You know, the monthly levels are still all the way down here. See, these haven't even risen up, which tells me that this market's still strong. So that's it for the Dow. I'll probably leave it there, folks. I hope that helps. And don't forget to get on Slack and shoot us any questions if you aren't clear on any of the indicators, or you want some additional help. We're happy to take questions, and you know, we're really keen for you guys to learn and follow the method that we use to analyze all these markets. And hope all that helps. And you know, stay tuned for some of Sean's commentary, and we'll see you soon.